Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
We got anybody there? Not on the pickup? Okay. Interesting day. And we start off with the S&P up 12 points on expiration day. Again, I said last week that I covered my shorts on Friday except one position. It was nice enough to go down here and give me an opportunity to get out this morning. In the short-term newsletter, I'm holding one position short in the Tech Insider, and we'll see how that does on Monday when its brethren hit the proverbial where the rubber meets the road, so to speak, on earnings. So we'll see how that goes. Don't have much out here. Don't like the fact that, in the stock market, it's pretty much standard to say, if you're not buying the highs, you're just not trying. And that is that if you're a big man on Wall Street that gets paid by trading other people's money, the worst thing that you can do is not make money. You just go to work for somebody else when everything blows up. That's the way it's been in the past. There are just not that many traders anymore. Most of it's actual machines doing all the trading. So they don't even have a lot of people to fire or go other places after whenever we get the next debacle, and we will. But when you get into these things where things aren't really getting any better substantially, but the market is basically buying it all on the come, you need to always be a little bit worried. But I'm just thinking that eventually we're going to get one big move out here, and it's going to make probably the next 3 or 4 years of what I work for seem small. But we will we'll look at this and look at some other stocks. Anyway, NASDAQ's up 33, the S&P, of course, up 12, Dow's up 145. And just no end to the market only going higher. I've been to this rodeo a few times. All the people that did what a lot of people are doing, which is just saying, well, the market's going up, so I'm going to be in it. Get into a mindset that I have not seen people be able to get out of. People still around the market making money, buy and sell. I love it when people are always calling into Tom's show about gold. That gives me a lot of information. I also love it when people only say the market can go higher. I may be wrong, but when it does pay off, it will be so asymmetric. I think that's the right way to say that. Asymmetry, that I will be more than happy. A lot of people have to make a few dollars every day, like they're working for a hourly wage. I am not one of those. But again, don't have a lot of skin in the game right now, and may take me a few swings of the bat before I put the homer out. But my spidey sense says that we have come to a level that is most interesting. And again, as you can buy options now that are cheap, and lose maybe 1 or 2% on a trade, you can be on the short side or the long side for a fairly small amount. So to me, this is still a great market, even if the payoff doesn't come on a daily basis. What else do we have? Okay. Asymmetric. Asymmetry. Asymmetric. But you know what? I spend a lot of time working and reading, and I don't spend a lot of time talking other than on this show. I don't learn much when I talk. I learn much when I listen. And I've found out that over the years, a lot of words I'm not pronouncing anymore because I just don't say them out loud. I think them. But we'll talk about that more as the show progresses. What else do we have going on here? Well, that's about it. It's options expiration. Not uncommon to see a big push. And one of the reasons why I covered all my short positions last Friday, thought at best, you thought maybe we'd be up 10, 15 points. So I'm not real excited about the upside in the market, especially when I see what could be an air pocket that gets bigger on a daily basis. If we were converging to higher prices, I think that would be one thing, but we're not. We're actually seeing a lot of the indicators like the summation index roll over, and we'll see if anything changes today. But my guess is that we've got a couple of days here before with options rollover before we have any significant movement, either up or down. But Monday and Tuesday, probably sideways to maybe a little bit down. So we'll see about that. In the meantime, we always like to start the show off with a little bit of history.
That it's all just a little bit of history repeating.
It is history repeating, and on this day in 1962, the White House press corps lies. They tell that President Kennedy has a cold. In reality, he's holding secret meetings with advisors on the eve of ordering a blockade of Cuba. Kennedy was in Seattle and scheduled to attend the Seattle Century 21 World's Fair when his press secretary announced that he had contracted an upper respiratory infection. I guess we can count this as a white lie because it was for the good of the American people. This wasn't a video that somehow sprung up that no one ever saw that caused something. This wasn't to cover up anything, but to do something quietly. President flew back to Washington where he supposedly went to bed to recover from his cold. He was actually looking at overflight pictures from a U-2 showing all kinds of missiles being set up in Cuba. And of course, this goes into those last days of October that a lot of movies have been made of. And one of the actual closest we came to nuclear war was a nitwit who actually was the commander of a Russian sub, wanted to shoot a nuclear torpedo at an aircraft carrier of ours. And a guy that doesn't get much credit said, "Niet." He was the second in command. If you ever watch Red October with all the keys around the neck and all that stuff, that actually did exist, and he wasn't about to give his key to the other guy, and the carrier moved on before they had a chance to lob a nuclear torpedo at it. But that's probably the actual closest we've got, although a lot of other people say different things. On this day in 1962, looking at the end of the world. If you bet on the end of the world, the problem is you'll only be right once. Won't be anybody reflect from on the other side. We'll be back in
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Not much other than that going on in the news today. We're going to look at some charts. You can give me a call at 877-927-6648. We'll be glad to take your phone call. It's been kind of quiet this week, but you can certainly do that. You can email me at path@tfnn.com. And I don't know what else. That's probably everything you need to know. Arena Pharmaceuticals. Oh, we got to get into some of the earnings, too, from next week and the earnings this morning. In fact, I'm going to call on Audible here. Let's take a look at GE. Not so good, but I guess everybody knew it was problematic already. Ran it down to 22.10, recovered most of it today. Pretty huge volume. I don't know. It's options expiration. My guess is that they may have just pushed it up for the day, and you might see this continuing on. I'm not going to even bother with Honeywell. Arena Pharmaceuticals, to look at a handful of them here. I wanted to look at some of these stocks in the biotech sector first. Arena Pharmaceuticals had a nice spike on July 11th, 27.86 with 15 million shares. Got into it a few days ago with 800,000 shares. So the market pretty light. Certainly the energy coming up from this August 21st low has been very light. If we look at the IBB, last couple of days, it was being held up on no volume. It did go lower down to 329.42 today, and did so without all that excitement of a volume. But you got just a little bit farther to go to get in it, but probably one of the weakest sectors in the market. Let's take a look at BBRY. Somebody asked me yesterday of whether this stock could come back. The only thing I know of is that BlackBerry is very close to losing its royalties for a lot of its patents. They're going to expire. And I don't know if they expire this year or next, but they are very close to the point where they're going to be totally worthless. You had some fairly decent moves back up, but again, these walking dead stocks are always perpetually 50% short. So can you get a 20, 30, 40% move in it? Yes, but the people that are short on this thing are betting that it goes to zero. They will eventually be right, like Sears Holdings, SHLD, and Radio Shack, and the rest of them. When we look at Sears out here, this thing's just, they just circle the drain for a long time before the lawyers work all the games out. I just don't see any reason to be throwing money at BlackBerry. In fact, I would say this is one stock where if you think you want to go long, please just give your money to charity. This is just one that's going to be a continual heartbreaker forever. But my guess is as they lose those patents over the next few years, that will be the total end of them. One of the other things that you need to know if you're investing or even trading tech companies is that there's a thing known as the Canuck discount. And that is if you're a sharp coder or hardware engineer or any technical kind of guy, you can make about 4 times more in California than you can staying in Canada. Now, there's a handful of people that still stay there, but if you're very good, they just go to California. U.S. government's fairly lax on Canadians coming down and working in technology. So they go down there. So any kind of startup or anything else around Canada tends to get rated fairly regularly by headhunters. And of course, it's tough to turn down 4 times as much, even in moving to California. Taxes are incredibly high in Canada. And that's one of the reasons why if you look at an IPO in Canada, you don't see many. And you almost see none at all now. But at the same time, it will normally price out for the same price earnings multiple at about 25% of what its U.S. cousin with the same pretty much same stuff and the same numbers and the same industry will bring. Okay, what else is going on here? CCJ. Well, we now found out there was collusion with Russia, but it wasn't what we were thinking of. It was all about the uranium deal. I've been looking at this. I can't really come up with any kind of idea about why this would change. But I've been looking at these uranium companies for the last couple of days. The question is whether or not we boot the Russians out of uranium production here in the United States now that we know that they basically bought off a lot of people and the FBI was involved as early as 2010. Question is whether or not we still want to let them have our uranium. Maybe since we're not going to use it, it doesn't matter. Maybe they paid enough in bribes to everybody politically that it doesn't go any farther. My question would be whether or not somebody like Cameco, a Canadian company outside the U.S., might see production in the United States go down if the Russians have to vamoose. And see it. You've got a high volume low, and we're kind of headed back down to that $8.76 low. That's the October 3rd low. 13.5 million shares. Today, you just have 600,000 shares. So while I know there's not a whole lot out here, I know that kind of sometimes fundamental reasons like this set up some very nice deals. It's not uncommon to see, of course, things like uranium, gold, or platinum go from heaven to hell and from hell to heaven. So I always keep an eye on these, but no signal other than no volume over here on the right side. If we saw some new items that the Ruskies were going to get kicked out of that Nevada, I think it's Nevada and Utah range up there where they get the uranium. It might be interesting to keep a very close eye on CCJ. DDD. 3D Systems. Well, not such a bad day. This did come down on pretty heavy volume. I've been thinking that maybe this thing would have been making a low in the coming weeks, but certainly looks like it's going to take some consolidation on these 3D printer companies. They've done a few things that I personally like. That is that they have started to work on other things other than plastics for low pricing for printing. And there are a lot of metals and new manufacturing media these days, like metals, enhanced plastics, and other forms of titanium and several other things. A lot of these things are starting to be used, and we can continue to think that this business may do well. I kind of look at this as kind of an Amazon. I mean, Amazon was 120 bucks. It went to 10 bucks in the dot-com bust. Eventually, these things are going to base out. I think that there's probably some decent value in them. It's just probably not yet. Maybe in a couple weeks, if this thing goes sideways, this may be some kind of buy. We'll be back after this.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to go on to earnings on Monday. Before the bell, we've got Halliburton. I don't see a lot in this one. It basically went up to the 46s. What is that, on September 29th, that matched the July 20th volume at around 12 million shares. No real big signal. Energy off that August 18th low was a little bit better than the move down, so I don't see a clear move on that. Hasbro also out. This thing's just kind of hanging around. Came down with huge volume. These toy companies are not looking good at all. Seagate, which has had some fairly rough earnings as of late, this actually looks like a big ABC on the way down. Upside is probably 36.50. Downside is probably $30 on that one. PetMeds Express, PETS. This one's just been going sideways. I don't see a lot in this one way or the other. See if we have anything. I heard Andy last night talking about the Baltic Dry Index, and for all the moves and the pricing, doesn't seem like these guys it never seems to come to the bottom line. This one actually hanging out at this $8 level. Maybe these bulk shippers are finally turning the corner. Hard for me to say, but I dislike the energy off this one from September 13th. This did not come up on a lot of juice and is at fairly significant resistance. So the risk reward pretty tough on there, but maybe they surprise us. Maybe these bulk shippers are ready to get back into gear, but I don't see anything in the charts so far. Maybe there's something in the earnings. ePay, is that Bottom Line Technologies? That's interesting. See if there's anything else here. Okay, that takes care of Monday morning. Let's get into Monday evening. Logitech, these guys have been doing a lot of good when a lot of people wrote them off. I didn't think much about them. I didn't want to short them, but I didn't want to go long. This does have 3 big gaps. I don't think anything shows that this thing's going lower at the moment. But, man, you got gaps at 32, 28 to 30, 28 to 26, and 24 to 22. If this thing starts heading down, look for it to fill 32 and then all 3 of those gaps. Not predicting, just saying if this thing doesn't or whiffs on earnings, watch for those 3 gaps down below, I think, to get filled fairly quickly, because that one's pretty much priced for perfection for what they do. See, Rambus, I won't get into the charts on that, but that's another company like BlackBerry that has a lot of patents that will run out fairly soon, so I'm not big on that. Whirlpool, WHR, a little push up here today. Got into its gap down from the 27th of July with 2.5 million shares with 1.4 million shares on October 5th. It failed there. It's kind of come back up today on just 400,000 shares. Again, this was in the heyday of housing. Everybody wanted to buy a new washer and dryer when they moved in, but maybe not so much anymore. Let's see if there's anything else out here. Okay, that's about it for Monday. We get into Tuesday morning, and it's McDonald's. MCD. No signs on this thing of stopping. Just keeps moving up. I don't like the energy since it broke through the 161.72. Man, I'd have to be pretty nervous on this one to hold through earnings. I wouldn't short it, but if this thing comes back 161, 160 support, who knows what's to the upside on this. But did get a kind of a chuckle of these guys in Korea, South Korea, of course, that they were raided last week. And, of course, guess what? The South Koreans were putting in the meat to discount the price just a little bit. Earthworms. Yes, ground up earthworms for hamburger patties. Not all, but enough for filler. High in protein, don't you know? But ground up earthworms at South Korean McDonald's. Remind me not to eat at McDonald's in South Korea, although I had a very interesting time there once. Caterpillar also Tuesday morning, so we'll take a quick look there. This one, again, no big signs, lots of big gaps down below. Things been going sideways for 5 days. No real signal out here than a super light volume. Man, these things would make me nervous if I was sitting on some big profits. I think I'd go ahead and ring the register and wait until earnings came out. Of course, with all the yelling and screaming in North Korea, Lockheed Martin's been one that's been nothing but a terror. And as you get up to this one, no real signal either. No break, no anything else. JetBlue, JBLU. This one could be an ABC on the way down. Everybody was yakking on CNBC about how they had to buy airlines this week. I didn't understand it, the arguments whatsoever. But, yeah, this thing didn't get much of a bounce off this $18.05 low from September 8th. So we've got that. General Motors also. What would it be if it was Colonel Motors instead of General Motors or Specific Motors? Now, this one, very nervous on what this thing has done. It's a parabolic move. It's got its close back on a 3x3 above the line. One close below it would say you to pull the trigger short on this one. So any kind of weakness on Tuesday morning, you'd want to look at that one short. Everybody's showing a huge supply of vehicles. I don't know why that thing is up there. 3M also has broken out above a long-term trend today, Tuesday morning for this one. For earnings, you got 855,000 shares into 3.4 million shares from June 20th. So you are breaking above these levels without much excitement. But, of course, earnings on Tuesday morning. But watch for this thing to pop right back down below 214 if this thing whiffs. GLD, we haven't looked at this one, GLW, excuse me, which is Corning. This company, of course, makes the glass for many smartphones. It's been able to expand a little bit. There were times when I thought this company was going to go bankrupt, but apparently their patents were a lot better than I said or thought. It's now going sideways. Kind of interesting to see that it didn't have a lot of reaction when Apple did to lower demand. We'll talk with Tom O'Brien about that today. And I don't know if it's less demand or actually smaller margins that affected Apple, but we'll talk about that. Certainly, when we look at this, Corning going into earnings is not giving you any kind of signal other than a 50% retracement off this high at 32.17 down to the $27.71 low on August 18th. You're just sitting in the middle of this range and against these two huge candles down. And on the 26th of July and the 27th of July, came down with 15 million shares. We're into that.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're going to continue going through earnings next week. We talked about Corning. Again, they kind of make money no matter what. If you buy at least a decent smartphone that's over $200, it's got Gorilla Glass in it. So you don't really know. Biogen IDIC. Do they still use the IDIC? I don't think they do. BIIB. This one's been kind of pushing up. Down today, not a lot of juice. But again, earnings on Tuesday morning. NVS also Tuesday morning. This one's just been hanging out and going sideways. To NVS. Lilly also. So a lot of biotechs coming out next Tuesday in the morning. So look for the IBB to get froggy Monday afternoon. Actually had a big pullback today, but also froggy Monday, and on results on Tuesday, you should get a great deal. United Technologies, is that right? Yeah, United Technologies. This one's up to about $120. It's back down to this gap down on the 7th of August. Did so on 5 million shares. What else you got here? That's about it. Up here with 3.5 million. Well, best day was 3.5 million shares today, up on 1.3. Looking at earnings, we're going to get a little bit of a reading on home sales with Pulte. Also on that Tuesday morning, absolutely no sign of this thing, man. What you don't want to be is if in one of these things is if it whiffs, because these things are absolutely perfect. Been going up every single day. That's going to be rather tough. Okay. So those are all before the bell. Let's take a look Tuesday after the bell. AMD. Actually, he's coming out. This one had, of course, a huge heavy move down from 1565 down to the August 21st low at 1186. Talk about fanboys, people that just absolutely believe this company's going to be $1,000. There are a lot of these people pushing AMD on websites. When I read the tech websites, Seeking Alpha and the like, I don't understand the idea. Maybe they get bought out by Intel, but my guess is that they don't. But that's kind of the bet that everybody's making. I don't think that Intel can buy them for antitrust regulation reasons, so that would probably be about it, and the only people that could really buy them. Let's take a quick look at Intel. Again, Intel really looked like it was ready to break out like Microsoft did in 2012. I think it was 2012, maybe 2013, 2012. Kind of same kind of thing. Again, I don't think this thing's going to run quite as hard as Microsoft did just because of the amount of shares this company has. But another company that kind of was doing everything wrong for a long time, got a new CEO that kind of knew what to do. Same kind of thing, probably not as good as Microsoft's CEO, but still very good. Engineer at heart, got rid of a lot of stuff that they were doing, wasn't making any money, focused what they're doing. And of course, with its memory products, machine learning initiative, I think these guys can make a lot more money and even bring the margins up in the future. I think that's what you're seeing since the breakout. Got to $40.42. To Chipotle. Run for the border? No, run for the bathroom. The Chipotle Mexican Grill. This thing's been going sideways for a while. Actually, I've been looking at this chart, and I think maybe for a while, if this thing got back down to $300, you might actually find some kind of bottom in this stock, although it's probably the most hated in America and in the stock market right now. Probably people that killed children are more popular in the stock market than Chipotle now. And you just don't know when these things will bottom, but not a bad pattern out here. Don't know if there's a lot more to say about it than that. AT&T, after the bell on Tuesday night, we got a murderer's row of stocks that can move out here. This one always made me think more of GE than any other stock. Energy has been huge on the downside, especially on the 12th. So don't think anything's new out here other than that this certainly looks like it could go and bust that $35 level without much effort. Akamai, which is absolutely killed, I think, in the last earnings call, if I remember correctly. Yeah, there you can see it. This thing came down on the 26th of July, did so on 15.2 million shares. Up today, filled half of the remaining gap on about 600,000 shares. Very tough for this company to compete with Amazon, Google, and the rest in the big cloud services and products. Technology continues to be an issue. Yep, Intel is continuing nicely. iRobot. This whole extension above this gap seemed kind of way overdone to me from April 26. We're finally back at that level, and we come down in energy. Chart does not look all that bad. Actually, one of the better looking charts out here. I would love for this thing to go sideways, even after earnings, and have all the volume dry up. But, $75 back to 109, 110, not a bad looking trading range, but it's probably going to need some level of consolidation. So I would love in a pullback to see some of these things come out a little bit. Illumina. Of course, these guys are big sellers of DNA sequencing, and that's going to be even a bigger thing as the world goes forward. This is up to its previous September 13th high at 214.34. We got to 211.66 today. Not much juice before going into earnings. Not much juice off this September 28th low. I don't think you can really touch this unless it came back the 180, 185 level where I'd like to get this, because I think that there's more than enough machines out there in the short term. Maybe this takes another quarter before that takes effect, but I think there's a ton of those machines and maybe just a little bit too much capacity in DNA sequencing. If you do a full sequence of a human gene, that's about 80 gigabytes on a hard drive. Most of what these machines that they do aren't full sequencing. There may be 4 or 5 gigabytes of a human DNA that where we know to look already for major problems. As I think those kind of smaller machines or smaller targeted things go to full DNA sequencing, I think that's going to be a big issue. So I'd love for this thing to kind of come back, but kind of reminds me of an Intuitive Surgical. You need to wait for the huge pullback on these things, but the long term also looks fairly good. Okay, what are we at? 250. So we got one more segment. We'll be back with Tom O'Brien at 3:30, but a lot of technological stuff to talk to. We'll talk to Ben from Tallahassee when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets, right here on TFNN. Wow!
And we're going to go to Ben in Tallahassee. How you doing today, Ben?
Great, David. How are you?
Another day in paradise.
Yeah. So, of course, anything can happen with certainly another hour left in trading. But if you're to take a snapshot of the SMH right now, would you agree that it just made a new high but is creating a small doji with pretty light volume? And I'm starting to wonder if it's starting to lose its luster short term.
I'm thinking more like Monday, probably Tuesday for the SMHs themselves. If you're looking for a high, you got options roll over on Monday and Tuesday. Normally the markets start moving on Wednesday. So I think for me, I don't think there's a lot to be done other than look at Mondays and Tuesdays in the SMHs and see how they react and see which way the option market makers go. I think a lot of people were short. I got out of my short position in the SMHs. last week, and
Okay.
you pull the trigger and they don't operate correctly. But this doesn't really feel any different to me than the .com bubble. Everything just went up a little bit more every single day. If I saw some news that changed what's going on, but I think, tax cuts, all the other stuff, I just don't see where anything's physically changed. And certainly the EPS numbers aren't changing. So to me, this is just one big, I'll buy a little higher. Actually, the technical term is the bigger fool theory. And, at some point, the Beanie Babies bust, the .com with no earnings busts, and you just don't see it. But certainly, if you want to know if something's brittle, it certainly is. So we'll wait for it.
Thanks, David. That's our weekend.
Yeah, there's just no signal yet. When we get back, we'll be talking to Tom O'Brien at 3:30. 30 minutes from now. In the meantime, so when you can't help me happy, we'll see you Monday. Same bad channel, same bad time.